they're putting in that work.
All right, guys, welcome back. Thank you so much for waiting. So I can see a lot of people has gone out, so I'm not going to go back into it. So I don't think I'm going to answer any questions. So that is the benefit of waiting. So can you hear me? Please type in one in the chat. Under 1 minute, I'm going to move really fast. So anyone who joins late, that's is going to be that's going to be the benefits of not being patient. So if you can hear me, guys, put in one in the chat. If you can hear me, type in one in the chat. Type in one in the chat. Type in one in the chat if you can hear me. All right. Glad you guys can hear me. So welcome to today's class. Welcome to today's training. So what are we going to be sharing with ourselves today, guys? The first thing I'll be talking about is that we will be discussing about a popular strategy, which is what you guys already know, which is the king strategy. All right, this strategy is what a lot of people have been using, and we understand a lot of people still want to use this strategy, but their main challenge is they don't know where and how to enter to take a trade with this strategy. Okay, that is why we have decided to put on this training. All right, because the more you learn about the strategy, the more you use a strategy, the more you are most likely to become profitable with that particular strategy. So if you are using the best strategy in the world, even and there is no best strategy. All right, there is no best strategy. Every strategy is a good strategy, but if you have not been working with the strategy enough, you will definitely not know the up and down of that particular strategy. So this strategy is what is is a very simple strategy. Okay, it's a very simple strategy, as you know, but you need to know how this strategy works. All right, because a lot of people have been facing a lot of challenge with this strategy on where exactly they have to go into a trade and how they need to exit a trade. Okay, this is what is giving a lot of people some challenges, and a lot of people tend to take bad trades. All right, a lot of people tend to take bad trades. So a lot of people tend to take bad trades with this strategy. Okay, there are some certain set of trades when you see it, you have to ignore it. So today I'll be sharing that with you, which trades you need to avoid, which trade you want to take, and how to take a trade on the right pair. All right. So guys, let me quickly, if today is your first time you'll be joining this Sunday training, please put in two in the chat. If today is your first time you'll be joining our Sunday training, put in two in the chat. If today is your first time, put in two. So if today is not your first time, type in five. If today is not your first time, type in five. Okay, good. I'm glad you guys, this is not your first time. So as you know, you want to be here every 5 p.m. On Sunday by 5 p.m. So you want to be here to learn new things. All right. It is our joy to see that uh, you learn this strategy and become profitable with it, because this strategy is designed for both newbie, intermediate, and advanced trader. So anyone can trade this strategy. So as you keep working with us with this strategy, you're going to uh, learn more about this strategy, because we want you guys to keep making money. And the good news of it is that we'll be sharing signal based on this strategy, because We understand a lot of people want to use this strategy. We'll be sharing trade signal based on this strategy. So we are still expecting few more minutes to vote and record their votes before we can accept this. Okay. So as soon as we have the right number of votes on the group, then we will start putting a trade, and we'll be putting close to between 5 and 7 trades on the group in a day. So with that, taking 5 trades, we are confident out of taking 5 trades, we are confident that you will win close to 4. So we'll be on a challenge for this, for each person to make at least 5% growth every day. And obviously, there are days this strategy will not give profit, but trust me, majority of the time we will be profitable with this strategy. So that is what we're planning to do, to give at least between 5 and 7 trades on the group every day. So everybody can grow exponentially with 5% daily growth. All right. And we're going to be doing this for as long as possible. All right. So, guys, goal is just for you to be able to use this strategy on your own and trade without relying on anybody. I hope this is very, very clear, guys. So this training is not going to take us more than 20 to 30 minutes. Sharing the right information, no tautology, and no uh, moving here and there, just to share what you need to know. It's not all about the time we spend, but it's all about the quality information we share in these guys. All right. So guys, let's get started. Let's get started. The first thing I'll be sharing with you guys, that let me quickly run 5 minutes recap on how the parameters is being set, so that you guys can get yourself more familiarized with the whole process before I share the two important things with you today. So as you know, we are working with 5 indicators right now. All right, 5 indicators right now. The first one you want to work with is one exponential moving average 120. All right, this is to determine the trend. This is to determine the trend, which is the red line, is to determine the trend. Whenever we see above the red line, which is the exponential 120 moving average exponential, whenever price is above it, this tells us that that particular pair is on the is rising, is going up. All right. The next indicator we want to use is 5 and 12 exponential moving average. Okay, the blue line right here is known as the 12 exponential moving average. Okay, I'm double sure we don't have newbie in the house. So if you have newbie, you don't know how to use this strategy, you may want to go on our YouTube channel to look for how to set up all the parameters from the beginning. So the third indicator we want to bring out is 5 exponential moving average, which is this black line. Okay, make sure it's exponential, apply to close. Okay, you select different colors just for you to be able to differentiate. All right, the strategy says whenever you see a cross, okay, the strategy says whenever the 120 moving average is below candles, we should look for buy entry alone. Okay, so therefore in this with this, we want to look for a buy entry alone. So whenever we see the cross of the 120 moving average crosses from the down to the upside, crosses the blue line from the downside to the upside, then that is a buy entry. All right, we don't want to look for a sell entry right here. Okay, this for that we only want to look for buy entry. So that is number one. The third indicator, the fourth indicator we want to bring out is RSI, Relative Strength Index. So this, once you bring it out, the period we want to use is period 21. All right, period 21. Make sure this space is typed 21 and go to level. We want to use the middle line, which is 50 level. All right. So by default, you will not have 50. You have to put in add, click add and type in 50 right here. and click OK. So once you click OK, this is the kind of settings you have. Okay, so the 50 line will be included in between the 70 and 30. Okay, you only want to work with the 50 line. So whenever the RSI line is above the 50 line, so that tells us that for a buy. All right, we should look for a buy. So that is that. So now, before you take the trade right here, the moment you see this cross to the upside, before you take this trade, you want to check on the same line. On the same line, where is the position of the RSI? So if the RSI is above 50, then you can take the trade. But if RSI is not above the 50 line, then that shows you that we are not yet on a strong uptrend. Okay, you don't want to take the trade. All right, so that is how to take the trade. And for you to take this trade, the first thing you want to check, if a signal happens right here, we want to be able to filter, all right, to be sure that we are on a strong, because having a strong uptrend gives us a good chance of winning the trade. Okay, so that is why this strategy we have included filter time frame, higher time frame. So the higher time frame is we use for H1. So you want to be able to select higher time frame one ahead of the time frame you want to use to trade. So in this case, we are using 1 hour as our trading time frame. So we will use H4 as our filter time frame. So on H4, on the same line, on the same area where we are having the cross of the 5 and 12 moving average, can you see right now? Right on the same spot, based on this vertical line that I have drawn right here. Let's go to H4. So we can see on the same area, 120 moving average is also above the candles. So this tells us that we are on a very strong uptrend. All right. And additionally, on the same time frame we want to trade, which is 1 hour in this case, so we can see price is also above the 120 moving average. So that is the condition number 2, giving us strong confirmation that we are truly on uptrend. All right. So for us to take the trade, we want to check RSI, the position. So as RSI is above the 50 line, then that is a good is a good trade for us to trade. So that is when we want to take the trade. That is one of the trades, a good trade, right? Now let's talk about the stochastic. The stochastic is only used to give us continuation entry. It does not have anything to do with the beginning of our entry. You only need the RSI, the moving average, and your filter time frame. Okay, so that is what you need for the first entry. So the continuation entry, that is when you want to use the stochastic. So whenever I see the stochastic for the continuation entry, whenever I see the stochastic crosses from the downside to the upside, as you can see right where I have this vertical line, you can see we have the stochastic crosses crossed right here rather. So if you miss a trade right here, you miss this first entry right here. So stochastic has given you a good entry. So has given you a good entry. So when you see the stochastic crosses from the downside to the upside, then take your trade. Take your trade, all right? Take your trade to the upside and enjoy your profit. Now, where do you put your stop loss? Let's start from where we have the first entry. You want to put your stop loss below the last low. In this case, this is the last low. All right, if you have taken your trade right here, you want to put your stop loss below the last low. And mind you, your take profits, you can use ratio 1:1. Ratio 1:1. I remember, ratio 1:1 has 80% win rate, 80% and above. It means when you use 20 pips, you target as your take profits. You use 20 pips as your stop loss. You target 20 pips as your take profit. If you take 10 trades with this, out of that 10 trades, you can win nothing less than 8 out of 10. All right, using ratio 1:1. So ratio 1 to 2, you can win close to between 65 and 70% trade before you can see any retracement. All right. So guys, I hope this is just a quick recap on how to use the strategy. So let's go into what I want to share with you guys today. It's a very simple information that's not going to take us much time. Now, how do you use this strategy? We have talked about, I have shared with you on how to use this strategy with correlation. Correlation is one of the best way you can use to harness this strategy and make good money with this strategy. All right. Now, the first thing you want to look at the type of trade you want to take, how to maximize profit with this trade. The type of trade you want to take is this, guys. You want to be able to look for a pair. I repeat again. You want to be able to look for a pair that is already in a strong uptrend. All right? Uptrend. What do I mean by that? That when you clearly have the 120 moving average below the candles, where you clearly have 120 moving average below the candles. Let's use another pair as an example. Now, in this case, let's use this area as an example. You're gonna get what I'm about to share with you. Now, in this area, there is a signal that comes up right here. But sometimes when you are not yet good with the strategy, this kind of entry may retrace and come back. Take a trade right here. This kind of entry may retrace and come back when you don't have good knowledge about the strategy. Okay, so this type of pair around here, between here, look at, this is where the move started from. Between here and here, oops, between here and here, you can see the 120 moving average is very far. The candles, which is the price, is very far below the 120, above the 120 moving average. So this is a strong uptrend. So you want to look for a strong uptrend, guys. You want to look for a strong uptrend. Now, in this case, you can see right from this place, you can see we have a sharp movement to the upside, which is a strong uptrend. Now, you can see the next thing that happened was that we have a cross down of stochastic around, of 5 and 12 moving average around here. You can see this is where the signal happens. Right after this signal, what did we have? A good push up. We went up about 55, 53 or 54 pips. For you to have used 25 or 27 pips, making about 57, 53 pips. That is more than ratio 1 to 1. So what am I sharing with you guys? You want to be able to look for a pair where the 5 moving average, 12 moving average, and 120 moving average has gap in between the 3 of them. I don't know if you are getting this, guys. You want to be able to look for a pair where the 5 and 12 and 120 moving average has gap in between the 3 of them, which means whenever you see something like this is a clear signal that this is on a good strong uptrend. All right, so whenever you take a trade with this kind of pair, in the next few hours is going to deliver. Is going to deliver. But the challenge a lot of people have is that they want to trade every time. They want to take trade every hour, and it is not so. And one of the things I like about this strategy is that this strategy is a strategy that can give you close to 15 signal or more every day. This strategy is a strategy that will give you close to 15 or more signals every day. But you want to be able to filter it to take the best one. You don't just jump into a trade because okay, the strategy is perfect, fine, it's perfect. I am not saying when if you take the strategy just with the condition you are not going to win. You will win, of course, but you want to be able to filter it more, to take the ones that are most perfect. That is what you are looking for. So you want to be able to look for a strong uptrend in this case. Okay, when you see a strong uptrend in this case, you can see it will quickly. Look at when we have the cross right here again, we have the cross around this place again, cross to the upside. You can see it's also delivered after some couple of hours. Despite the fact that market slows down around this place, but it delivered after some hours, probably in 24 hours or more. You have 35 pips, making about 90 pips in less than 2 days. So this is a good one. So guys, that is the number one thing I want to be able to share with you guys. Look for a strong uptrend. All right. In the case of downtrend, now look at this. We have a strong downtrend around here. But in this case, when you mark this one, when you mark this place, around this place, now let's mark it. You want to be able, remember, for you to be able to take any trade, it is important for you to check it on higher time frame. What is this? This area, are we on downtrend? Okay, let's check on this line. Let's check H4. Are we truly on downtrend? Yes, you can see price is already below. It's already below the 120 moving average on downtrend. But on our filter time frame, you can see price cross to the downside, which is when you are expecting to take the trade, but yet it failed. So nothing is 100%. You can see, enter right here, your stop loss above here. You can see price retrace back up. Price retrace back up. Now, look at, this is where it happens again for downtrend. In between here, let's say you don't want to take a trade right here, you can see right around here where we have the gap. Okay, where we have the gap, look at, can you see the gap between between 120 moving average and 5 and 12 moving average? So if you do not take a trade right here because it's not so clear to you, there is no clear gap. You can see we have a clear gap right here. You have taken your trade right here when you see the cross right here. You have taken your trade right here. Now it delivered. You have taken your trade right here with 40 pips. It delivers 50 pips. So you can see you've made ratio 1-to-1 right here or more. So now, let's, for example, in this area, I want to talk about the continuation part of this strategy, guys. We already seen a gap around this place. Okay, now this is telling us that we can take a good trade around here since we already have a gap. So in this area, we can confirm that. Let's confirm this vertical line on H4, which is our filter time frame. You always want to confirm the direction first on your filter time frame. All right, let's check. Okay, that is on downtrend. Going back to our entry time frame. So in this area, guys, you can take your trade with the continuation entry. Let me try to enlarge it. You can take your trade with the continuation entry. As a matter of fact, this candlestick pattern tells us that market is going down. It's a bearish candlestick pattern. So for you to be able to take this trade, if you do not understand candlestick pattern, that is why we have the stochastic. So you see the stochastic as cross right here. All right, the stochastic as cross right here. So you have taken your trade, the beginning of this candle. I hope you guys are following this simple information. You have taken your trade, risking about 33 pips, and price went down as far as 75 pips before the retracement happened. So you have made your made your money and out of the profit, out of the market rather. So what am I saying is that look for a pair that has that has space between 5 and 12 and 5 between 120, 5 and 12 moving average. All right. So around this area, you want to wait for the continuation. How do you wait for the proper continuation around here, guys? I am sharing two information with you right now, guys. I'm done with the first one. I'm already on the second one, right, guys? For you to take the proper continuation entry, you want to see price. Which means you want to see candles in between the 5 and 12 moving average. All right. I don't like to take continuation entry in this case. You can see we have continuation entry around here where we have the 5 and 12, the stochastic cross right here. The stochastic cross right here. But be mindful whenever you want to take a continuation entry, be sure market candles traveled back into the 5 and 12 moving average, travels back and touch in between the 5 and 12 moving average. I hope you are following, guys. If what I'm sharing with you is making some sense, type in yes in the chat. This is what a lot of people don't know about this strategy. As simple as this strategy is, when you understand it very well, believe me, you keep making money from this strategy every day and nothing is going to stop you. So before you can take a continuation trade, you want to see candles travel back into the 5 and 12 move. Either it closes above the 5, all right? It closes above the 5 and 12 moving average like this, or you see it close above the 12 moving average, or it's in between. Either you see it like this, can you see this setup right here? You see something like this, or you see something like this. I hope this is clear. You can see this is another continuation. So you want to be able to see this type of setup when candles will come into the 5 and 12 moving average. And the 5 and 12 moving average does not cross to the upside. So if the 5 and 12 crosses to the upside, it means you are not looking for continuation again. You are looking for the first strategy, the first entry rather, which is 5 and 12 cross over. So you can see around this place, the 5 and 12 crosses to the upside. So after the close of this candle, that is when we want to look for first entry. Okay, and the second entry is the continuation. I hope this is clear, guys. Now let's go back to the first pair we're talking about. I think AJ. I want to be able to show you guys something. When you take a trade with a trend, you can see AUD in the last 2 weeks or 3 weeks trend a lot. Okay, so for those who really know how to use this strategy, make a lot of money with this. So now let's use this pair to explain. Let me use to explain something with you guys. Let's say you take a trade. I still have one more information to share with you. I just quickly want to cover something here with you guys. Now you can see around this place, we have a good space right here. So this tells us that this pair is ready to start trending. You can see right here, the moment the 5 and 12 travels above the 120, you can see we have a good space right here, even though it's not much, but this is telling us that, see, this is ready to start trending. Right here, we have a cross. Okay, let's say you don't enter a trade right here. You enter a trade right here, we have this vertical line. You can see all conditions met. So you have entered a trade if you do not want to use ratio 1:1, once you enter a trade, you only want to exit your trade when you see 5 moving average crosses down. In this case, you can see this is where we have the cross down. All right, and if you do not exit right here, this we have a cross down right here. I hope you can see. So you want to exit your trade whenever 5 moving average crosses down, change direction. All right, so you can use this to maximize and to make use of this strategy to make a particular pair to the last end. So this will ensure that when you take a trade with a particular pair like this that is on uptrend, you want to be able to exit your trade when the cross happens. Okay, you can see this is where we have the cross of 5 and 12 moving average. So you have taken a trade right here. Just keep enjoying your trade, enjoying your profits until you see the cross happen. So the moment you see the cross happen right here, exit the trade. Just exit the trade. All right. Now, around this place again, we have another entry right here. Okay, because we already have this, having a good space right here is a good indication that this pair is still ready to push up some more. So you have taken a trade right here, having your stop loss below here. You can see price pull back into the 120 moving average, but I'm double sure it's not going to eat you out because it's on the same level with it. You can see. So when you have, this is the stop loss low, you have to put it about 3 pips below, which price does not even come near. All right. So now you've taken your trade right here. This is where we have the cross again. You exit the trade right here. I hope you guys are following. You take a trade right here, exit the trade right here. This is where the cross, the 5 and 12 change direction. Okay. Now you have taken another trade right here. You can exit it right here. You can see we have another cross right here. But there will be a situation where, in this case right now, where we have a good push up, this will give you the opportunity to make good money without 5 and 12 moving average crosses each other for a long time. Okay, you've entered a trade right here. This has given you almost 120 pips. You risking 20 pips right here. So this is one way you can make use of this strategy, guys. You not want to use risk reward ratio. All right, but for the continuation, guys, I tell you, ratio 1:1 is over 80% with the continuation entry. Ratio 1:1 is far over 80%. So now, let's, for example, you have taken a trade right here, guys. You have taken a trade right here. This is your first entry. So price pull back. You can see around this place, price pull back into the 5 and 12 moving average. You can see price came back to touch the 5 and 12 moving average. So here you have an entry. Once your stochastic crosses to the upside, you take another entry here. That is for those of us who want to have multiple entry. All right, take another entry right here and enjoy the profit all the way up. So you take the profit, you can take this very trade on continuation as ratio 1:1. This one will be out in profit on ratio 1:1. While you still have the number one entry running in profit. All right. So as you keep having continuation entry, you keep taking a trade with ratio 1:1 until price change direction. Now around this place we have another Continuation entry right here. You can see price went up, pull back. Look at this. Price pull back into the moving average. You have taken a trade. This is even more than 1-to-1. So you are out in 1-to-1. Why you still have your trade, the number one setup, number one entry, running in profit. So this is how to maximize the profit, guys. Now, this is the number one entry. You take a trade right here with continuation. You take another trade right here with continuation. So you have taken two quality trades in between. This one ratio 1-to-1, this one ratio 1-to-1. So you have taken two trades in profit around here. And now this is the original trade, which is the number one entry, the first entry. So you will only want to exit this entry when the 5 and 12 moving average crosses down. All right. I hope this is clear. And now look at this place. You have taken a trade right here. You probably may have lost. You can see this one went below this one. So you probably may have lost. So nothing is 100%, guys. I am not saying it is 100%. But when you catch a good move, overall, you're going to make money. I hope this is very, very clear, guys. So in this case also, this is another example. We have multiple examples. Let's look for another pair that is trending down. Okay, let's use this case, AUD card. So now, guys, before we call it a day, I'm going to share one vital information with you guys on when to take the exact entry. All right, because a lot of people will enter late. So now we advise you, when a trade has gone too far, you want to let it go. Okay, you don't jump into a trade. You don't keep pursuing a trade. When you miss an entry, just let it go. Another one will come. So, and that is why we have the weekly analysis for you guys to leverage on it, so it can help you in your journey. Okay, because we are doing this with our wide range of experience using this strategy. Okay, so now let's use this. We have a good a space right here, but let's say you don't want to enter a trade right here, guys. But this is a good trade when you understand how the strategy works. Before this cross happened, this is going to be a good trade. I knew then. So you can see we have a space between 120, 12, and 5 moving average. So with this, you want to be able to wait for this. If price does not push seriously down, in this case like this, if price does not push seriously down like this, you can see around this area, after this cross, price pushed down. But in this case, when we have a space, but the space is not much, you want to wait for price, for 5 and 12 moving average to cross to the upside, then cross down. On its way down, you want to take the trade. Reason why you want to do it that way is because having the 5 and 12 crosses back to the upside around this place, this tells us that this is just a retest. Okay, because whenever you see a breakout of the 120 moving average, having price going just broke down from the upside to the downside, it's like a resistance or support has been broken. So whenever a resistance or support get broken, you are definitely 85% to 90% of the time you will see the retest. So having a small space like this, you want to wait for the retest. Wait for the retest in the sense that wait for the 5 and 12 moving average to cross each other to the upside. So on its way down, that is where you want to enter. Okay, in this case, if you have entered a trade right here, your stop loss right here, you can see it has given you a massive 45 pips. It has given well over 120 pips before the cross happened. That is not where I'm going, guys. This is rough. This is just rough information to share with you guys on how to use this to keep using. All right. So now let's say you do not take a trade right here. Okay, you don't want to take a trade right here. You can see along this path, it's a good one to take a continuation entry. All right, it's a good one. You can see where we have the 5 and 12, candles traveled back in between 5 and 12. When you want to take continuation entry, this is what you want to look out for. You want to be sure that 5 candles, at least 2 candles goes into the 5 and 12 moving average. When you see something like this, then start focusing on your stochastic. So there's no way you will see something like this. There's no way you see something like this, that the 120 moving average, the RSI will definitely be on the same side of the signal. So the only thing you want to look out for right here is just the stochastic. Okay, and in this case, look at after this candle, from the beginning of this candle, you can see we have the cross of the stochastic right here. If you look at it closely, so this has given you nothing less than ratio 1 to 1, about 38 pips. You risking 38 pips or 40. It has given you ratio 1 to 1. So guys, that is the simple information I want to share with you on how to use this strategy. Okay, because the moment we start putting the signal on, you guys can understand what we see when we put the signal on. So that is why we put this training up. We actually have another training we wanted to put on today, but any moment during this coming week or upper week, we may start to put the strategy on. So we want you guys to understand what we see before we put in the signal on, so that you can understand it better. All right, so it can help you. It can also help you in your journey on how to use this strategy to make trade. All right, so now the last thing I want to share with you guys is this: how do you take the trade exactly when the signal happens? This is a cross. All right, this is where the cross happens. You want to be able to see that the cross between 5 and 12 moving average is very, very clear. It does not matter if the current candle is in this case, it does not matter if the current candle is pushing up. Now, I can say once this cross happens, the moment this candle, you can see this very candle, it is this very candle that cross it. This very candle, I have my mouse on. So after the close of this candle, the beginning of this very candle that I have my vertical line on it, you can see exactly on this vertical line, there has been a very clear cross between the 5 and 12 moving average. Okay, so once you see that clear cross between 5 and 12 moving average, before the candle starts pushing down seriously, you want to calculate your risk management and go into that trade. But in a case where the cross is not clear, having a clear cross like this, you can see where the cross is not clear, you want to wait for that clear cross to happen, or you want to wait for the next candle to close, so that the cross can be clear to you. Because at times when the cross is not so clear, probably the 5 and 12 moving average are still kissing like this. If you take the trade, price may reverse into the other direction. Okay, and by the time that the particular candle that is initiating the cross close, we may not have the 5 and 12 moving average cross each other anymore. So from there, you will see price reverse. All right, So from there, you may see price cross to the other side and hit your stop loss. This we are sharing this with you guys from wide range of experience we have using this strategy. All right, and the more you use this strategy, the more it's going to be in your favor. Trust me, if you use this strategy to an extent, you understand it better. You will not look for any other strategy again, because this is capable of giving you any percentage of profit you want in a day if you understand it perfectly well. The only thing is that it's just going to take some of your time to monitor trades, all right? And that is why we have the crossover alert to help us, to alert us that, okay, there's a signal on there's a cross on pair, so we can start looking at on those pairs. So that can reduce the work we have to do in monitoring pairs. Okay, I'm talking about the crossover alert. So that is where that helps a lot. Okay, you want to understand how the strategy works perfectly, guys. All right. So, and aside that, the second one is that on the continuation entry, we have the continuation entry right here. Let me try to enlarge it, guys, so you can see that the cross, can you see, guys, look at the stochastic, you can see the cross has happened. So after the close of the candle that initiate the cross of the stochastic, that is when you want to enter. You want to be sure, see clearly that stochastic has crossed. You want to see clearly that stochastic has crossed. So after the very close of this candle, you take your trade right here, having your stop loss above here. All right, and most of the time 60% of have tight stop loss using the continuation entry. The continuation most of the time has tight stop loss. Sometimes you may have 15 stop loss, 17 stop loss, 12, 20 thereabout. But I don't like to take the one that is too large. Okay, so guys, this is all I have to share with you guys today on this strategy, just for you to be able to know what to look out for, guys. We will get to a situation where we won't even talk about this strategy again. We'll just refer people to go and watch video. But this is the opportunity to learn everything that has to do with this strategy. That's why we are bringing it up constantly, so that we want a lot of you guys to get yourself familiarized with it, because we have a lot of things to pull up. All right, apart from this, right, we have a lot of things to pull up for you guys to learn from. So, but we want to be sure we focus on one aspect, you master it and understand it before we switch into another one, right? Because that is the goal on how to gain. I hope this is clear to you guys. So if you have gained value today, please type in 333 in the chat. If you have gained value, put in 333 in the chat, guys. If you have gained value. If you have gained value, put in 333 in the chat, guys. If you have gained value today, guys, type in 3333 in the chat. All right, so guys, I'm so happy to have you guys here today. I'm so happy, even though the information is not many, but the most important thing is just for you guys to have vital information. We may take this as a video and put it on YouTube, but we decide to bring this live to you guys. So if you have any question in the chat, let me know in the chat. Let me know if you have any question, or you may, so that I can bring you up to ask your question. So that is why live class is better than watching recording that you won't be able to ask any question. If you have any question, please put it in the chat. Let's hear it. And if you have any question, please put it in the chat, guys. Okay, if you do not have any question, type in no. Everybody is either you type in yes or no. Of course, Okiki, you can use it. You can use trailing stop to start trailing your stop, to start trailing your profit. But the best way to use trailing stop, the best way to use trailing stop is when you use the last high and the last low. All right, use the last high and the last low. What do I mean by that? For those of you who are new, let's say you can see, if you are taking a trade right here, this is a good strategy. I must tell you guys, if you are taking a trade right here, okay, continuation right here, you want to put in the stop loss for this one. You want to put in the stop loss right here. All right, after you've taken the trade with this one, you want to shift your stop loss on the first trade to this one. Okay, this is the last high. All right, so now you can see this is where we have the cross, and you have to exit this trade. Okay, when you see the cross, it means this direction has changed. You want to exit this trade. So once you see another cross to the downside, you can take another trade. Okay, I'm taking another trade right here on the same spot. After a couple of hours, we still have continuation entry. You take the continuation entry right here, the stop loss for this one, you move it into this one. Okay, where you have the stop loss for the continuation entry. I hope you understand. You take your first entry right here, where you have the stop loss right here. This one, you take the right here. Your stop loss for this very trade is going to be above here. So you're going to move your stop loss for both trades to be at the same level. I hope this is clear. All right. So thank you so much, guys, for having me. Any question in the chat? Is there any question in the chat? In the absence of no question, type in no, guys. We are done for today. That is just the simple information I want to share with you guys. Nothing really complicated, just to share simple information with you on how to maximize this strategy. Very simple. No, it's not complex. Very simple. So, but very soon this video is going to be available on our YouTube, so you can go back and rewatch it. And for those of you who have not subscribe to our YouTube channel, make sure you subscribe. All right, make sure you subscribe and click the bell icon notification. All right, and make sure you share this with your family and friends. So thank you so much for having me. I still remain your host. My name still remains Abolade Adekola. So thank you so much for being on the King FX Trading Mastery. All right, so see more of you guys on the group, and happy trading. Bye bye for now.